Hello, traders, and good morning from Chicago. It is 8:03 a.m. Chicago time on the 13th of September 2020. Happy Monday. This is episode number 2071 this morning. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have a risk on sentiment following the selling that took place on Friday. The market is recovering. The thing to note is last week's performance. Last week's performance is the worst we've seen in the S&P since February, according to the Wall Street Journal. The other thing to note is the push for a $3.5 trillion U.S. budget is coming to a head here. The market is seeing this as stimulus. It's money for new healthcare infrastructure, healthcare, and other initiatives, education, and so forth. It's basically Biden's entire agenda in play. And then, of course, tomorrow the market is nervously watching as we go into Inflation Tuesday. Tomorrow we get the inflation number at 7:30 Central, 8:30 Eastern. It's a key release for the week. In terms of earnings, nothing major came in pre-market. Oracle is set to announce after the close, expecting 97 cents per share on 9.77 billion in revenue. Today we have the monthly budget statement at 2 p.m. and some numbers out of Australia at 9:30 and 11 p.m. The S&P currently is in a multi-distribution profile. 183,000 contracts have traded. The overnight inventory is 98% long. 98% long. The range is relatively wide at 32.5. The point of control at 44.7450. Currently, it has shifted up from around 44.69 or so. So that's where we stand. Note, it is Monday, so the rotations have been updated. The rotations have actually expanded this week versus last because of the additional volatility. Remember, the VIX is above 20 currently. That sell-off on Friday, which I completely missed as I was traveling, had really introduced some pretty big volatility. So, the rotations have been updated in the gray box in front of you, 4.75 in the ES, 18.5 NQ, 4.6 Russell, 36 points in the Dow, and 25 cents remains the same for crude. Crude is steady. Crude trading above $70 currently, and is the current leader, with silver losing the most value this morning. Again, risk on sentiment. We do see some flows into the 10-year and the 10-year note and the 30-year bond in the U.S. The Eurobond is almost unchanged. And we see that the European markets are relatively aggressive this morning, with the DAX pushing above 1.06% this morning. Germany got its wholesale prices number, and that gave it a bit of a boost there. So that's where we stand, folks. The current volume is well in line with the overnight stats. So let's switch gears and look at what was expected on Friday in our review segment. I want to remind you this morning that I'm looking at and trading the December contract in the U.S. indices, December 2021, or also known as Z1 or Z21. That's the contract expiration we're on. We are this week in rollover week. Be mindful, during rollover week, the delta and volume are quite distorted because a lot of flows are coming out of September, whether long or short, and are hitting the bid or lifting the offer in a December contract to roll those positions once the premium between the contracts is in line. So there's a lot of volume that's coming through, and this ties in with this chart right here. This is what's called the pace of the roll, and we're showing it here for the S&P 500. This is right off of CME's Quick Strike website, the Active Trader website, and we could see that the roll, the orange line right here, is at 40%, and approximately 80% of the open interest is expected to roll in the S&P. This is based on historical performance. So about 20% gets delivered of all of the S&P open interest. So currently we're at 50% of the roll. We are tagging 40% out of 80%, and we expect this roll to be done by Wednesday. By Wednesday's open, we expect things to be somewhat back to normal as most of the roll volume is done, and the focus becomes Thursday, Friday. The focus becomes simply using the futures for hedging, delta hedging, and delivery risk on expiration on Friday morning. So these are important things to understand in futures. Very unique for futures, but that's where we stand. So back to what I talked about on Friday morning, the expectation given what had been taking place and what happened the night before, the rally pre-open back into this multi-distribution profile and ending up in the middle of the distribution and creating a point of control at the then September. This chart's from the September contract. We're currently trading December, so to compare December to September, you have to add 9.25 points to December contracts to get September pricing. I'm not going to get into that. I know it sounds complicated, but it's not. There's a difference in premium between September and December. That difference is currently 9.25 points. So you have to discount all contracts by 9.25 points so that they match December, or you end up with a gap between the December, a fake gap or a non-existent gap between the December and the September contract, starting either Thursday or Friday, depending on whether your software rolls with the exchange or rolls on volume. So I know that sounds complicated, but it has to do with the cost of carry of a futures contract. So given the rally before the market, given this push here all the way into in the pre-market, all the way into the 32, the expectation is that we have found our buyers and we are likely to consolidate in the middle on both scenarios, with the 0002 holding all the way up to 20. So I expected 20 points of range on Friday coming into the weekend, and it's likely to be sideways, and I had stated that we should temper our expectations. Well, guess what, folks? That was completely wrong. The market did not agree with that idea at all. I'm going off of my experience trading the roll Friday and expiration week, quad witching Friday this Friday. So a lot of times we end up getting pinned or we end up rotating, and given that we were at the 4,500 level, I expected us to sit sideways. So here's Friday. Let me get these out of the way because they're wrong. Didn't update them on this PC. Here's Friday. We push up to 4509 quarter. Again, add 9.25 points to get September contracts. It's going to be hard to do this review. And then we push down into the September 4490, 4491, December 4482 or 80 or so. which again was a surprise to me. Consolidate, break through the IB low, pull back to mid, and then from mid, just crush it to the downside. You could see as it pulled back to the mid, there was a pretty decent delta back to zero, and then it just absolutely sold off on the close with some pretty decent volume occurring at the low. The expectation on Friday, and Friday's settlement price is 44.49 on the December contract. The expectation, given the way it closed, it was a weak close. The expectation is we are likely to push the low this morning. The low this morning was 44.46.5. So we did push this low of 47.25, but all we've done is walk ourselves right back into this fat distribution here in the 44.74 to 44.80 area, and that's where we are. That's where we are right now. Okay, so that's where we stand on Friday. That was a selling day, a very thin, unbalanced profile. There was some relatively aggressive selling on the open, which carried into the afternoon. Here's what we've done since then. Let's clean this up real quick. This is what we've done since then. We reopened, pushed back up. Look at where it went. It went to the low of the morning on Friday, right here. Pulled back, put in that lower low. We were expecting this to open and push that lower low. Immediately did not do that. Put in a lower low and then pushed through that resistance. Pulled back to the resistance, now support, and pushing back to that pullback area on Friday. So this is the initial morning low. This is the pullback to mid on Friday, and then we had a continuation trade. What this looks like a corrective kind of behavior. Again, the overall market sentiment today is attempting to be bullish, and it's really pushing. It's likely to get a lot of resistance on the way up, in my opinion, based on where we are. Be careful this week. This week, historically, I've been trading for 21 years. Approximately 19 of those are in futures. And I can tell you that this is the low return. Friday is the worst risk what's it called? Risk adjusted return. That's what I'm looking for. Friday is the worst risk adjusted return. The Friday after rollover, it's kind of just, for me personally, I'm just talking about personal metrics, performance metrics. Friday is just one of the worst days for me to trade. Second worst is this whole week. What I used to do back in the day is 4 times a year, I would take advantage and enjoy a 9-day holiday from Friday, a 10-day holiday from Friday, taking Friday off, just basically taking off on Thursday through the weekend, this whole week through expiration, and then come back Sunday refreshed, because it was better for me to forego the revenue. And remember, I've always traded in prop. It's better for me to forego the revenue plus spend money on travel than to trade this week. This is not to discourage you for this week. This is just to say, hey, watch yourself and watch your expectations. Now, the market has a wide range today. Remember, we're coming into a market that has about 32 points of range already. And so this is not likely to be another boring, quiet Monday. So I'm going to pay attention today, but please cut your size and please try to be patient and picky. But we have some really fantastic structures. Let's bring back all of the profile information here. We have really decent structures to work with. We have prior highs and so on that became support here. that we broke through, that we've kind of mushed through. They became resistance the other day on the pullback. We're pushing into these areas and so on and so forth. There's just some really good structure in the market, in my opinion, currently. And it's making for some interesting risk reward scenarios. Coming in. That being said, the market is a little bit jittery. The market is concerned about the Fed and what it's doing and how much stimulus remains. It's bullish this morning, but it was so on Friday as well. Friday we came in with quite a bullish market. We had a P-shaped profile and it ended up selling off. I'm open to all considerations, but really I'm just telling you that historically this has been a relatively choppy week to trade. What do we have? We have last week having broken the one-time framing up. We had one-time framing up on the weekly. We had one-time framing up on the daily. We made new all-time highs in the December contract at 45, 38, 75. If your number at the high on the day session does not match that, then your roll is incorrect. So make sure you have this 45, 38, 75 as your RTH high, all-time high currently. As soon as we made that high, we gapped down and we have not looked back. We've put in lower highs. We breached that a little bit, but we ended up with lower highs on Friday, re-triggering one-time framing down yet again, and we have pushed into this low right here from a couple of weeks ago. That's what was accomplished on Friday. You can see the boxes on here. There's a box at the 45.01 low. That is your key resistance above, in my opinion. It is approximately 20 points higher. This area is likely to present significant resistance into 45.10, which is the point of control from last week. Has nothing to do with the prior 45.10 from the September contract. This zone here from 01 to 10 is likely to get us choppy as we test from below. We'll see what happens. But this was a fair amount of range on Friday, 62 points, which is beyond one standard deviation. It's an impulsive day down, but currently we've taken back more than 50% of Friday's range. So that's relatively bullish, and we have a wide range. So we're likely to see it chopping around in the middle of this bar from Friday. Here's what things look like on the order flow front. The order flow, there's a significant bid at 75.25 that has been resting a while. You can see that most of that bid is colored dark blue. That is a block trade. That is one contiguous order resting at the 75.25. So if we pull back to the 75.25, I'm expecting a bounce initially. Looking at the order book, so that's the 75.25. Again, you can see this red line here has been sitting here a while. It goes a little bit back, and it looks to me like it is a meaningful order that wants to trade out. Above there, we have this 85 chopping in and out. It's not a single large order. Who knows what will happen there? But overall, when I look way up and down the book for order flow cues in terms of resting orders, there's not much there. And it's been like this for some time now. The order flow has been more hidden than usual. Overall, we've got a market that is pretty active in price discovery. Expect that to come into the open, and therefore I expect the open to be relatively decent. Let's take a look at what's expected for today. Again, I don't have an issue being wrong. The problem with being wrong becomes significant when I decide that I'm going to defend my expectations. This is when I cross the line from being a trader to being a gambler and someone who's just trying to protect his ego, right? So it's okay to create a plan that the market completely disregards and disrespects. It is just the way it is. Initial plays. Notice this is the 76 right here. And remember, there's large size at 75 and a quarter. It's been resting there all morning. So this is a significant area. Point of control, overlap with a structural low there that was resistance this morning. We pulled back and broke through, might act as support. So longs, a decent area you might lean on would be that size at the 75 and a quarter. That's all it's good for. Above there, I'm looking at the 87, 88. So this 88 is a significant test area, 88. And then if it frees up, if we get above the 88, we are really likely to push through into the 45.01. So in this situation, the 01, the bottom of that box, all the way up to 04. Okay, so what are we looking at for this morning? Open auction in range, looking for a pullback to 76, poke, push an impulse higher, consolidate here at the all-time high, and then squeeze into the 88, and then start to test the higher levels before pulling off at the end of the day. Expecting the risk-on sentiment to continue through the day. Now, remember, we had this on Friday. We had a risk-on sentiment that then ended up selling out and dropping. If we open up and we immediately see sellers coming right in and smacking this thing down, then scenario one is out of play. And we need to look to the short side, which is scenario two. Scenario two, take out the overnight high, potentially get into 80, the 88, but more likely consolidate, pull back to the 76, and then start to break lower. The next support down is the 66 area, 67. That comes from here. It is a low volume node as well in the profile, and it is a structural high in the overnight session. That was the first high on the rally once we opened. Consolidate a little bit, pull back, and potentially push through. Not expecting too much on the short side today, but who knows? You know, these drops have continuously and consistently been seen as opportunities to buy, and I expect that to continue. There's a lot of cash floating around that's looking for a home, and cash isn't worth anything in this economy. Being in the market, whether it's a crypto or more traditional equities and so on, that's where people are going to deploy their money as soon as they get an opportune time. And that's why we're seeing, in my opinion, there's so much liquidity. This is why we're seeing money flows coming in as soon as we dip in price for bargain hunting. Go with that. Good luck. And I'll catch you tomorrow morning. Take care.